Copper prices have had a positive correlation with the MSCI emerging market basket, and it has been on the recovery path after touching its 200-day moving average. So it is important to look at how the institutions are placed going forward and what impact does it have on the equity markets. First, let me highlight the LME copper price trend that we have seen so far this year. Remember that the prices peaked out in May 2021 after taking support at the 200-day moving average, which is the long-term support that market participants look out for. Remember that during this course, copper prices declined nearly 19%. However, from those levels after taking support at the 200 DMA, it has managed to rebound 10%. Now the resistance point going forward actually becomes the 100-day moving average and the falling trend line that we have received from the high point of May 2021. So it is imminent that we could actually go and test those levels. But in the process, something interesting has happened as far as the FNO data is concerned in the United States. Most of their fund managers have reduced their short positions on copper prices by the biggest amount that we've seen since 5 years. Now, there are a few factors which have contributed to this. One is the Chile mine strikes. Then you have the declining Chinese inventory along with the US infrastructure spending plan that has improved the outlook for copper prices going ahead. Lastly, addressing the impact on equities, there is a positive correlation that I was telling you between copper prices along with MSCI emerging markets. Let me highlight the few instances that we have recorded. There was a rally in 2016 to 2018 where copper peaked out in June 2018 and from there on started rallying. It gained over 60%, and during that same time the MSCI EM index grew about 80%. Then you have the fall from 2018 to 2020 where copper started falling in June 2018 and declined 37%. The same time period, the MSCI EM basket declined about 40%. And then talking about the recovery of 2020 to 2021, wherein copper bottomed out in March 2020 and more than doubled for itself during that period. The MSCI EM basket resulted in an uptick of about 88% during that time. Lastly, you have the fall of 2021, which we are mapping out currently. Remember that it peaked out in May 2021 and declined about 9%. The maximum drawdown, of course, was 19%, and during the same time period, the MSCI emerging market basket declined 8%. So all of this implies that there is positive correlation between copper prices and the emerging market index, and in case the outlook gets bright for copper prices, that could in turn boost the sentiment of the emerging market basket, thereby also increasing the chances of Indian equities rallying from here on as well, despite the fact that we are trading at all-time high levels.